Hello viewers, welcome back to the channel Share Market Strategies. Today I'm going to analyze the recently listed Bajaj Housing Finance stock. I believe that so many of you have followed this stock and many of you have got it during the IPO allotment. It has reached the highest value of 188 and then it has now fallen back to 115 rupees. This is actually the last traded price. This is almost 30 rupees down from the highest value it has reached in the recent times after the IPO. Right, now let's go and take a look at what is the 52-week lowest value, which was actually 146. The highest value it has reached was 188.50. Considering the current scenario, now it has fell down around 30 rupees. Right now, we want to check some fundamentals of the stock. Market capital, it's 1 lakhs crore market capital. So this is obviously large cap company. P by E ratio, which is almost 77. P by B ratio 7.37. Industry P by E ratio 28.39. So it's actually almost three times higher than the industry price to earning ratio. So it seems that the stock is overvalued. This may be due to the hype about the housing industry and financing industry for the house. And rate of earning 11.9 percentage, earning per share it's 2.10. So this P by E ratio can be calculated using the formula current market price divided by earning per share. So current market price is 159. If we divide by 2.10, we will get the value around 77. Okay, so the face value is actually 10. So in future, you can expect some split up. And then if you have one share, depending on the face value, you will get multiple shares allotted to your Demat account. But we don't know when they're going to split it up. Just I wanted to mention it here. Now, if you look at the book value, it's almost 22, but our actual price is around 160. So it's almost 8 times higher than the book value. The share price is almost 8 times higher than the book value. So which means the stock is overvalued. Considering the recent hype and all, so we may expect that this stock may further go down and will settle down at a reasonable price. So those who ever got the IPO, they may still go for booking profits. The others, especially the long time investors, they can keep on ordering at every dip. So in the long run, it's going to give highly valuable returns that you should remember. So let me talk about few more details, especially about related to financials. All of the details I'm getting from Growing Up. So revenue, if you compare quarterly from June 23 to June 24, 1 year. So it's starting from 1,763 crore, and then it has gradually increased, and then it has reached 2,200 crores in June 24. But if you look at the year-on-year revenue, increasing from 3,767 crores to it's almost 5,665 to, and then in 2024 it has reached the value of 7,618 crores. So if you take a look at the profit, so profit from The last 3 years, if you look at the values, comparing 2020 to 23, it's almost doubled. 710, it's almost 890 percentage increase, profit increase, and then from there on, 2024, 1 year around again, 1,258 to 1,731, almost 500 crore increase. So let's also take a look at net worth. Net worth has increased from 2020 to 2024. It almost doubled in 2 years. So 6,741 crores in 2022. Now the net worth has doubled. It's almost 12,234, almost doubled. We want to look at a shareholding pattern, especially how much holding the promoter is having. Promoter is having 88.75, almost 89%. Promoter still holds the company, and retail and others, they got 6.39 percentage. Foreign institutional institutions, they got 2.34 percentage. Now if you take a look at the domestic institutional investors and other domestic institutional investors, they have got 1.14 percentage. Mutual funds, they have also invested around 1.38 percentage. So considering all this, the holding pattern looks quite good, but price to earning ratio, price to earning ratio is quite high. It's 77, and comparing the book value and current share price, this stock is overvalued, but still it can be considered for long long term investment. But if you're a long term investor, then you can wait for the stock to correct. So I'm not a SEBI registered financial advisor, but I'm just trying to educate what are the parameters you need to look for when you are investing in particular stock. So there are a few other frequently asked questions about this stock. So which is, I'm going to just read it. How do you buy? So that you can access through any app that you have. Market cap, we already know it's 1,35,000 lakh 1,35,000 crores. PE, price earning ratio, P by E ratio is almost 77, PB ratio 7.37. So 52 week high, I have already mentioned, it's 188.5. So those whoever want to invest in the stocks, you can consider, if especially if you are a long-term investor, you can buy in dips and add it to your portfolio and hold it for at least 3 to 5 years. Also, wait for the stock to correct. So it's still a falling knife, so you don't need to catch it at the moment. If you're a long-term investor, you can wait. So it may again further fall down. The prices may go down. Okay, but it's not guaranteed. So take your financial decision wisely. Consultation with your personal financial advisor. Thanks for watching. Thank you very much.